In today's video, we will be dealing about analysis and interpretation of financial statements. This will be the first part. First of all, let us have the definition of financial statement analysis. This is a process of evaluating risk, performance, financial health, and future prospects of a business by subjecting financial statement data to computational and analytical techniques with the objective of making economic decisions. Meaning, financial statement analysis is about evaluating the business. We will use the data from the financial statements like SFP, SCI, CFS, and SCE for us to find out kung ang ating business ay nagkakaroon pa ba ng kita, kung umuunlad pa ba ang business, so that we can have the enough evidence for us to have the economic decisions that we will do for our business. The financial statement analysis is a guide for creditors, investors, regulators, and managers in the decision making about the business. So there are three kinds of financial statement analysis. We have here the horizontal analysis, vertical analysis, and the financial ratios. The focus of our today's lesson is about horizontal analysis and vertical analysis. Let us start with horizontal analysis. Take note, this is also known as the trend analysis. It is a technique for evaluating a series of financial statement data over a period of time with the purpose of determining the increase or decrease that has taken place. So we will have the analysis horizontally. We will compare example 2 years and we will determine if there's an increase or decrease. Horizontal analysis helps us to answer these questions. Is the business increasing, decreasing, or not moving? What is the magnitude of change? And also, what is the relative change in the balances of the account over time? Horizontal analysis uses financial statements of 2 or more periods. And of course, all line items on the financial statements may be subjected to horizontal analysis. Lahat ng items sa financial statement ay pwedeng gamitan ng horizontal analysis. Changes can be expressed in monetary value and percentages and are computed by using the following formulas. Diba? In our definition of financial analysis, we will compute and analyze. So, for the peso change, we have the balance of the current year minus the balance of prior year. Meaning, pwedeng magkaroon tayo ng positive value or negative value depending on the change. Pwede ding there is no increase or decrease on the balances. Then, the other one is about the percentage change. So, we have here balance of current year minus balance of prior year or the change divided by the balance of the prior year. So, for us to determine kung ano ang pagbabago mula sa prior year at sa current year. Let us have this example. So, let us have the sales. The sales for the years 2015 and 2014. So, our current year is 2015 and then the previous year is 2014. So, we will determine the change from 2014 to 2015. So, for our formula, we have peso change equals the value from 2015, the current year, minus the previous year, which is 175,000 pesos. So, the peso change is 75,000 pesos. And from that, the difference will be divided by the prior year, and that is 175,000 pesos. So we have here 75,000 divided by 175,000, and that is 42.86%. So how are you going to have the analysis? So sales increased by 75,000 pesos, the value from peso change. This represents growth of 42.86% from 2014 levels. So we have here the two values, the peso change and the percentage change. Let us have more example of horizontal analysis of an income statement. So we will compare the years of 2015 to 2014. For the net sales, there is an increase of 100,000 pesos because from 500,000, it became 600,000 pesos. Then, for the cost of goods sold, we have an increase of 63,000 pesos because from 420,000, we have 483,000 for 2015. For the profit, there is also an increase of 37,000 pesos. For the operating expenses, another increase of 13,200 pesos. And for the net income, since we have here 36,000 from 2014, which increased in 2015, and we have there 59,800. So the amount of increase or the peso change is 23,800. Now let us determine the percentage change. For the net sales, we have 20%. Then for the cost of goods sold, we have 15%. For the gross profit, we have 46.3%. For the operating expenses, we have 30%. And for the net income, we have 61.1%. Another one is for the horizontal analysis of SFP. So we have here the condensed balance sheets for the year 2014 and 2015. For the current asset, there is a decrease of 6,000 pesos, and we have a percentage of 7.5%. For the PPE, we have an increase of 9,000 pesos because from 90,000, it became 99,000 pesos. And it is a 10% change. For the intangibles, we have here a decrease of 13,000 pesos because from 40,000, it became 27,000. So it means there is a percentage change of 32.5%. For the total assets, we have here 200,000, then 210,000 for 2014. So it means there is a decrease of 10,000. So the percentage of change is 4.8%. Let us now proceed to the liabilities and equity. So for the current liabilities, obviously we have here a decrease of 6,000 because from 48,000 it became 42,000. For the long-term liabilities, also a decrease because from 150,000 it became 143,000. For the equity, we have here an increase because from 12,000 it became 15,000. So the amount of increase or the peso change is 3,000 while the percentage change is 25.05%. Now for the total liabilities, as you can see, it should be balanced. So it should be same with the total assets. So the peso change is 10,000 pesos while the percentage change is 4.8%. After the horizontal analysis, let's now proceed to vertical analysis. This is also called as a common size analysis. This is a technique that expresses each financial statement item as a percentage of a base amount. In using this type of analysis, attention must be focused on items with significant changes from one period to another. Depending on the nature of the business, it is possible that even a slight change in the percentage may warrant the attention of top management. For the SFP, the base amount is total assets. So we have here balance of account divided by the total assets. This is for the SFP, ha? So the base amount is total assets. So it means we have the balance of any account divided by the total assets. From the common size SFP, the analyst can infer the composition of assets and the company's financing mix. Let us have an example of vertical analysis of SFP. The base here is the total assets. So we have 1,400,000. So we will just divide every item or every account or account balance to the total assets. So we have here 200,000 divided by 1,400,000, which is equivalent to 14.3%. So that is for the cash. For the AR or account receivable, we have 400,000 divided by 1,400,000, which led us to 28.6%. For the inventory, we have 250,000 divided by the total assets of 1,400,000, which is equivalent to 17.9%. For the equipment, we have 550,000 divided by 1,400,000, which is 39.2%. So the total assets should be equivalent to 100%. So when we add the items from cash to equipment, we have 14.3% plus 28.6% plus 17.9% plus 39.2%. We have a total of 100%. The same process will be used for the liabilities and equity. Since this is a balance sheet, the base account or the base amount still should be 1,400,000. For the accounts payable, we have 21.4%. For the notes payable, we have 28.6%. And of course, for the capital, we have a 50%. A total of 100%. So for the analysis, we will use this statement. Which is the largest component? The largest component of asset is equipment at 39.2%, while the smallest component is the cash at 14.3%. On the other hand, for the liabilities and equity, 50% of assets are financed by debt and the other half is financed by equity. Because 50% is for the liabilities and 50% is for the owner's capital. So for our analysis, we will just base on the value for the biggest one, for the smallest one, and then how we're going to interpret or connect the liability, the equity, and the assets. Let us now proceed to the vertical analysis for the statement of comprehensive income. Take note that the base amount is the net sales or the total sales. So we will use the formula balance of account divided by total sales. For every account in the SCI, we will divide it by the total sales. So this will reveal how net sales is used up by the various expenses. Net income as a percentage of sales is also known as the net profit margin. Let us have the example of vertical analysis of an income statement. We will use the ABC Company SCI as of December 31, 2015. The net sales is our 100%, so this will be our base, which is 900,000 pesos. Let's start with the cost of goods sold. 400,000 divided by 900,000 is equal to 44.4%. For the gross profit, we have here 55.6%. For the operating expenses, we have 22.2%. And for the net income, we will have 33.3%. Let us have the analysis. For the first one, we will focus on the cost of goods sold and the gross profit. The cost of goods sold is 44% of sales. Then, the company has a gross profit rate of 55.6%. Let us now proceed to the operating expenses. As we can see, operating expenses is 22% of sales. Now let us have the net income. The company earns income of 0.33 pesos for every peso of sales. So how did we determine that? Net income divided by the net sales. So we have here 0.33. For the gross profit, generated for every peso of sale is 0.555 or 0.56. It came from the gross profit divided by the net sales, 100%. The use of common-size financial statements allows the comparison of two companies of different sizes. This is because the SFP and SCI comparative information are standardized as a percentage of assets and sales, respectively. Thank you for watching this video. If you have questions, just send them in our class group chat. God bless you and stay safe and healthy.